In today's video, I am going to be breaking down what I think are the best REIT stocks in Canada right now. Let's get down. Let's check these out. Okay, so in this one, we're going to be looking at InterRent Real Estate Investment Trust. This is absolutely amazing in my thought because, of course, we can look really long term and see their massive growth, but also we can also look at, of course, their dividend and their average volume, their dividend being 2.3%. Their PE ratio is also on the lower end when it comes to REITs right now in Canada, and their volume is huge. You can get in and out of this extremely easily. And if we look at their earnings and their revenue, their earnings, generally speaking, on good years will be much higher than their revenue. What I really like to look at when it comes to REITs is their revenue growth, and their revenue growth is growing, which is absolutely fantastic, and that is what you want to see. And on their 5-year chart, they had a very steady line on the way up. We can see that right here as well as right here. This was a very steady line. However, they did, of course, also get hit by the virus, and they did recover just like every other REIT stock with the virus. However, since then, they have been on a downwards trajectory, and it doesn't look like it's going to end anytime soon. Of course, if we extend these lines a little bit further, we can see that eventually these lines may cross. And if that's the case, if this continues to go down and then breaks above that trend line, then there could be some upwards motion. However, if it breaks below that trend line, we can see a little bit more pain. So this would be one of those stocks that you could buy in just a little bit at a time until you find that there is a reversal, and at that point you can start buying a little bit more. At least that's how I invest. Something else I do look at is if they continue to improve their dividend. And if we look back a little bit further, we can see that the virus did not affect their dividend at all. So this is a nice safe stock for the future, in my opinion. This is a REIT that really does invest in growth-oriented real estate, which is very important if you're looking for growth in your portfolio. Next is Dream Industrial Real Estate Investment Trust. This is important in my opinion because industrial, I think, is going to do extremely well over the near term, mainly because there are massive amounts of online stores that are opening. There are more and more people who are shipping things through Amazon, and because of that, there's going to be more and more facilities or more and more warehouses that are going to be needed. Also, when it comes to industrial, I'm currently looking for a place to be able to build basketball courts. I can't find anything in this area that is the size that I need. And because of that, we'll probably have to build something. And if that's the case, then guess what? If there's not enough warehouses for what I'm looking to do, that means that the price of warehouses is going to be continuously going up, and the rent, because if there's not enough things to buy, then the price goes up. It's like used cars right now. If there's not a lot of used cars in the market, the price goes up. My car has gone up $10,000 over the past 2 years, and it's a used car. Once again, revenue is increasing. Earnings is huge. Once again, that's going to be something that we will see in most REITs. Their chart did extremely well, just like pretty much every other REIT. However, their current downfall, what we can see here, is not as drastic as some other REITs. So that's why I personally picked this one, is because their current drop isn't as big as the other REITs, but also the sheer need of industrial real estate right now in my area is huge, and I live in a big city. It pays 5.8 cents per share every single month, and the only downfall is it hasn't increased it for a very long time. Going along with the theme of industrial, I think this is a massive, massive portion of what's going on right now. And with this, the PE ratio versus other REITs is really low because it is industrial, or at least that's what I've been reading. And because of that, also why I picked this stock is the average volume is huge. And the dividend is 2.7%, so it's not that bad. While their revenue is only slightly increasing, their earnings this past year was ridiculous. However, that is sometimes expected for what recently has happened within the marketplace. Since the virus started, this stock has gone to the moon. This is absolutely crazy. $12 up to a top of over $22 a share. And that's only been a couple of years. And even since the earliest point of the massive downturn from the virus where it hit $5 a share, if you got this way back then, which who knows who did, but that's a 4x multiple on your initial investment. It's also not dropped as far, like many other industrial REITs have not dropped as far. There is a massive demand for industrial real estate, and because of that, I think that this is going to have a massive boom. They have slightly increased their dividend recently, so that is also a nice thing too. And they've drastically increased their dividends since 2018. So between that massive point right there, which is right now there's a massive push to be online, which needs warehouses, and also there is there's not enough warehouses in my area. I'm trying to find an area where I can get 2, 3, maybe 4 full basketball courts in it. There's nothing. There's not even anything that can fit 1 full court in the warehouse. It's crazy. We need more warehouses, and currently I am trying to find investors so that I can create the basketball courts in this area. Anyways, if you are interested in that, obviously contact me. If you like today's video, hit that like button, subscribe, and I'll see you guys again next time.